Guys, welcome to today's class. In the last class I talked about Ichimoku indicator and how we can use it to enter profitable trades, right? So we are gradually wrapping up on our classes on price action, right? So on today's topic we're going to be covering chart patterns. Now, chart patterns is one very important topic that helps you to make technical analysis decisions, right? So I'm going to be explaining what chart patterns is, the various types of chart patterns, the benefits of different chart patterns, and how you can use them to enter profitable trades, right? So now we have two types of chart patterns, right? We have the reversal patterns and we have the continuation. When I say reversal, what I mean is, let's say the market is going up, and let's say a pattern of some sort forms, and you notice that the market goes down. Now this thing that happened here is a reversal pattern, right? Then if we talk about continuation, let's say something like this, the market is going up, then it forms something like this, right, and goes back, continue going up. That's an example of continuation pattern. So I'm going to be explaining each of them in full detail, you understand? So for reversal pattern, we have three main types of reversal patterns. We have the head and shoulder reversal pattern, we have the double tops, right, we have the double bottoms, right, then we have the ascending and descending wedges, right. Then under the continuation pattern, we have channels and rectangles, channels or rectangles, we have flags and pennants, we have triangles, right? So we are going to be starting with the reversal chart patterns, and the first one we're going to be starting with is head and shoulder pattern. Now, head and shoulder pattern is a reversal pattern that is formed when price reaches a particular support or resistance and it is unable to break it. A head and shoulder pattern is formed, or inverse head and shoulder pattern. Now let's say, now in the case of in a bullish market, right, in a bearish market we call it head and shoulder. Then in a bullish market, in a bullish market we call it head and shoulder, while in the bearish market we call it reverse head and shoulder or inverse head and shoulder pattern. Now let me show you an example with images. Now this is EUR AUD, that is a European euro versus Australian dollar, right? Now if you can observe, right, you notice that price went down, right, and at this point it went back up, then it went back down, then it went back up, then it came back around the same region it reached before, and it goes back up. Now these points that price could not break, we can see that this is our support, right? Support. This is also a support. Now head and shoulder is formed when this is price going down in the bearish market, it reached this support, it couldn't break it, it went back up, right? It came back again and broke through that support and met another support, a stronger support, and couldn't break it. Then it went back up, then it came back again, and this time it couldn't break that first support, right? Let's say this is the first one, this is the second one, and this is the third one, and it came back and it couldn't break the first one, right, and it went back up. Now this now becomes the head, then these 2 points becomes the shoulder, you understand? So this is inverse head and shoulder. Now this straight line that it keeps coming back to touch, we call it the neckline. Right? So now this is an example. Look at it. The same what I just explained. It came, price was going down in a bearish market, it reached a point where it couldn't break, then it formed a shoulder, went back up. Now this point, it came back to the test. This is the resistance, we call this point the neckline. It now broke past this first support and went a little bit lower, right? Went a little bit lower, then went back up to the and to go and retest that neckline, and he couldn't still break that neckline, right? And he came back. Now, this, remember, this is our head. These are the two shoulders. Now, since this is a bearish market, this is an inverse head and shoulder pattern, right? Now let's look, for example, for a bullish head and shoulder pattern. This is also an example of for bearish market. Look at this. Market went up, right? Came down, went up, came down, came down, reached this point. This LS represents left shoulder, right? Then it couldn't break that point, went back up, came down, broke it and formed the head, went back to that neckline again, and came back and formed the right shoulder and went back up, right? Now, if you can see from this diagram now, it's showing you something, right? It's showing you something. When price breaks this neckline, it is said, as you can see here, it's writing buy signal. It means that is a point for you to buy, right? That's the point for you to buy. Now, this place that we wrote as target is because this was the first point that price reversed from, right? If you can see here, market went down, formed this point, then it went down to form the first shoulder, formed the head, touched the neckline again, formed the right shoulder, and went back up, right? And went back up here, right? So the point where the price breaks the neckline, that is where you buy in a case of inverse head and shoulder. That is in a bearish market, right? Then this point here, like I said before, will now be your take profit. That is TP. Then your stop loss will be below the neckline, some pips below the neckline, right? So that's just for this one. Let me look for example in a bullish market. Then for a bullish market, right? This is just how it goes for a bullish market. The market goes up, as you can see in this diagram, right? Market goes up, right? Then comes down to form the first shoulder, right? Then it goes back up and breaks that first point and comes down and goes back. Wait, I'm not drawing this in right. Like this. The market goes up first, right? Then comes down to form the first shoulder. Then it goes past that shoulder to form the head. Then comes back to touch that neckline. So now what you do is, when you notice this first top forms, you just bring out your horizontal line and mark it out, right? And bring it out and begin to mark this neckline. So now notice that when price comes to that neckline, it cannot break that support again. Then it goes to the same point or around the region where the first shoulder stopped at and comes back up, right? And finally breaks the neckline. Now this point where it breaks the neckline, it is where you enter the market. That's where you sell, because remember, like in the other case when we were buying, the point where it breaks the neckline is our entry point, right? It's our entry point. So now as it has broken the neckline, you enter, you place your sell order, right? Then remember, the last when I was giving showing the example for bearish market, I said at that point where it started moving, or the first point where it reversed, is where you place as your targets or your take profit. Then around this region should be your take profit, just as you can see in this example here. You understand? Our shoulder, this HM represents this is our left shoulder, right shoulder, and our head, right? Then targets, then this line, our neckline, right? So these are just some of the things. Let me show you more examples, more images. And it is not compulsory that the neckline must be horizontal, straight. As you can see in this example here, the neckline is not straight, right? It is kind of slanted or diagonal, right? So as you can see here, market went up, formed the left shoulder, went down, and went up again, right, and came down and formed the right shoulder. Then what you do, remember, you mark out this neckline, this point of neckline, you mark it out, because that is where your entry will be, right? That's where that's where you're going to enter the market. So you need to mark out that left shoulder, sorry, mark out the neckline for your entries. So as you can see now, it formed the left shoulder, formed the head, formed the right shoulder, and breakout. Breakout is always where your entry is going to be. Same thing with this diagram, right? Same thing with this diagram. These are just images to help you understand, right? So see here, just some explanations. This one here says preceding bull trend, that is the market is going up bullish, right? Then the second one is saying enter when the market breaks the neckline, as I have been saying before. Then place your stop loss above the right shoulder. That is when you want to sell, right shoulder, that is above the neckline here, right? Then your take profit, project that distance from the neckline break line. Project that distance from the neckline break point for the target price, right? Just around this region, your target. You understand? So there's no big deal about this stuff. So by now you should understand head and shoulder pattern. Maybe I'll go to our chart when we are done and give us practical example of head and shoulder pattern, so I can see it practically. Then this is head and shoulder for markets that is buying, right? Then inverse head and shoulder, remember I said for markets that is selling, for bearish markets, right? So these are just more diagrams. This is just another diagram for inverse head and shoulder, that is for bearish markets. Look at it, neckline, downtrend, enter long on a 4-hour count. This is just, enter long means buy, right? Buy. Here it's saying wait to buy on a pullback to a new support. What it means is that, what this just means is, this market broke the neckline, right? Then market went up small, then it came back. Remember when I was teaching about support and resistance, I talked about pullback. Pullback means it's going to go and retest that point it just broke. Now it just it went back and retested the neckline and gave a bullish pattern and continued going up. This bullish pattern is going to be your entry. You understand? Some people don't wait for pullback. Some people enter immediately, it breaks the neckline, while some wait for pullback before they enter. You understand? So traders vary. You understand? So you just need to know the kind of trader you are and what method works best. So for how to trade this pattern, I've already explained it. I said you wait for the neckline to get broken, right? You wait for the neckline to get broken. Wait for the neckline to get broken. This is an example. If the neckline to get broken, then this is your entry, right? Then your stop loss should be above the right shoulder, right? So your stop loss should be around this region. Then your take profit is from the point where the market rallied up. Remember when I was teaching about Elliott wave, I said that there's we have impulse wave and we have retracement. So from this first impulse move, right, this first massive move, that first point is where you set your TP. But another thing is, it's not many people don't usually have time to wait for the market to rally down or to rally up for long. So your take profits can be anywhere you want it to be. If you don't have the patience to wait for a very long period of time, you can just use a small take profit, right? Anyone that suits you, you get. So now the next pattern we're going to be talking about is double tops and double bottoms. Now double tops and double bottom is somehow similar to head and shoulder pattern in that price, remember in head and shoulder pattern, price went up, right? Then encountered a resistance that it couldn't break, right? Then it goes down, then it goes back up and breaks that first resistance it couldn't break before. No, I'm not drawing this in right. Sorry. For bullish market price goes up, right? Then it comes down. This is the first resistance it couldn't break, right? Then it goes again and breaks this resistance, right? And encounters another resistance up. As price goes up, it encounters different resistance. So this resistance is strong, but it's not as strong as this resistance. If price was to break here again, it will still encounter a stronger resistance. So now price couldn't break here. It went back and later came back and broke it and encountered a stronger resistance and went back, went down, and this our neckline is our support. Came back to this neckline, right? And came back to this resistance and couldn't break it and came down finally and broke the neckline. This is an example for head and shoulder pattern, right? Now for double tops and double bottom, this is what happens in double tops and double bottom, right? Now price goes up for double tops, price goes up, encounters a resistance that it cannot break, right? Then it goes down. Then price comes, this is our neckline, right? Price now comes back again, goes back to that same resistance that I couldn't break initially and still can't break it. Then comes down again and finally breaks our neckline. Now what this now means is that this is our double tops. This is first top, top 1, this is top 1, and this is top 2, making double tops, right? And this is our neckline. This is our neckline here. Now they break when price now breaks this neckline. That is where you make your entry. This is for double tops. Then for double bottom, price goes down, encounters a support it cannot break, right? Then rallies back up, comes back to the neckline. It couldn't break the resistance and goes back up and can't break the support is still, right? Since it can't break it, rallies back up and finally breaks the neckline, right? This is what we call double bottom. This is top 1, this is top 2. This is for a market this indicates what the market is selling and you're looking for buying opportunities. Top 2. So this is 2 bottoms, double tops. So this is inverted, this is double bottoms, right? So the only difference between head and shoulder pattern and double tops and double bottoms is that head and shoulder patterns has head and 2 shoulders, but double bottoms only has 2 shoulders without head. You understand? That is just the principle behind the T diagrams to help you understand better. Right? Look at it. Like I drew there. It went down, couldn't break this support, went to touch the neckline, right? Came down again, couldn't break the support, and finally broke the neckline and went up, right? Now some of us that trade, we usually used to call this double top and double bottom. We used to call it M pattern. If you look at double top, it's like this, something like this. It looks exactly like M. Why this point here is the neckline, right? Then I call it M pattern or W pattern. Then for double bottom, if you look at it, it's like this, right? And it looks exactly like W. So you can call it M pattern and W pattern, but the right name is double tops and double bottom. But any name that works for you that helps you to remember, it still goes. This is the neckline, this is the support, right? So just like that. This is more diagram to help you understand. This is peak 1, peak 2, peak 1, peak 2, neckline, support, right? Double bottom, the same thing. So there's no big deal about this thing. Once you understand it and you can detect it, you know how to make use of it. So see this other example here. We went up, right? Couldn't break this resistance, came and touched, formed the first neckline, went back up, and finally broke the neckline. Now, if you can see in this diagram, it don't sell. the point where it breaks that neckline is giving you signal to sell, and your take profit will be, remember I said that point is still reversing and going up. Take profit around that point. You understand? So you can see that there's nothing actually difficult in making use of these patterns to trade, right? There's nothing difficult. So these are just more examples, more diagrams to help you understand better. Neckline, double tops. This is a double bottom. I have the neckline, and we have the two bottoms. Neckline, two bottoms. Like I told you before, the neckline must not always be horizontal. It can be slanty or diagonal, as in this case, right? So that's just it for these ones. Double top or double tops, double bottoms. Now, how do you trade these patterns? The same thing with head and shoulder pattern, right? Just wait for a breakout at the neckline. Once there's a breakout at the neckline, you can enter immediately, or if you don't want to enter immediately, you can wait for the market to break out and come back and retest. But it's not in every case that the market comes back to retest before you enter, right? So you can wait for the market to break out and come back and retest before you continue. You understand? So now, once it breaks out, in this case, the breakout is your entry. Your stop loss is below the breakout, or your stop loss can be around this point, the right bottom, right? Then your take profit is from this point, it reversed. Remember, right? Take profit from this point, it reversed, and that's just it. There's no big deal about using this pattern, double tops and double bottoms. So before we go to these two patterns, we just talked about head and shoulder patterns and double tops and double bottoms. They are reversal patterns, reversal chart patterns. That is to say, anytime you sight them, it means that the market is changing direction, right? So now the next topic we're going to talk about is continuation chart patterns. That is to say, patterns that forms. Let's say the market is buying, a pattern that will form and the market will continue going up. It's a continuation pattern. Reversal pattern, like this one I just explained, are patterns that will form. Let's say the market is buying and they form and the market goes down. You understand? So that is just it. There's no big deal about it. So I think I'm going to go to our MetaTrader app now to show us practical examples. We'll start for some practical examples so that we can understand it practically, right? So just follow me as I open MetaTrader app and show you practical examples. Okay, I just opened our MetaTrader app, and I'm going to be using for the first example, I want to make use of a USD card on the daily time frame. Remember we have different time frames, right? Once you click on this, you see different time frames, right? So now we are on the daily time frame. Now, if you can look at this now, you will notice something. Let's draw it, right? Now this is the first move, right? It formed this peak, right? It went down. Now this point now is what? Our neckline, right? And it went back and broke past that first point, right? Broke past our first resistance that I couldn't break before, right? And went down again, and went down around that same region, where the first one formed, right? Now it just broke our neckline. What does this mean now? This is telling you that this market is going to sell down to around this region. This is clearly a sell market. So now this is an example of head and shoulder, right? Head and shoulder pattern. We just saw an example in USD card. That is United States dollars against the Canadian dollar, right? So now let's look for an example with let's say for sell. We just saw for head and shoulder for a bullish market. Let's look for head and shoulder for a bearish market. Let me change my phone to portrait mode, right? So if I change my phone to portrait mode, so we can have a better view. Same thing here. Look at this. Look at this thing that happened here, right? From here, the market went up, right? Formed this first shoulder, came down, broke it, right? Came down, went up again, and went down completely. Now what do you do? Normally you're supposed to mark out this point, right? Mark out this point, neckline. Now immediately you broke the neckline, that is where you enter your sell. And notice, remember I said that this point, it first rallied up. So now what it means is that this is our entry, and this point should be our target, our take profit. You understand? So see how easy this pattern is, and how it makes identifying entries easy for us. So we have identified two head and shoulder patterns, right, for a bullish market. So we are looking for head and shoulder. We're looking for head and shoulder for a bearish market, right? For a bearish market. Let's just keep scrolling. We'll find more. Okay, yes. This is a perfect example of inverted head and shoulder pattern. Look at this. The market came down, right? Formed this, right? Then formed the first shoulder. Then he went down to form the head, right? After forming the head, what next? It went back to around the same region where it formed the next shoulder, and came down, right, to almost the same region. If you're noticing this thing, right? Now remember, this is our neckline, this point here, right? Then it came back up and broke our neckline. Although in this case it bought for some time, but it did not buy for a very long time, right? It didn't buy for a very long time. But this is another example of head and shoulder in a bearish market, right? So now let's check for more examples if we find. Let's check for more examples if we find. For more examples if we find. Okay. I think let's. I've showed you example of head and shoulder for a bullish market, right? I've showed you example of head and shoulder for a bearish market, right? So now let's do some examples of double tops and double bottom, right? Now this thing we are seeing here is an example of a double top. The market went up, first of all, met a resistance it couldn't break, went down, right? Now this first point, remember, is our neckline, and it went back up to around that same region, to around that same it went up first, right? Met a resistance it couldn't break, went down. Now this is our neckline, right? Went back to around that same region it couldn't break, that's resistance, and finally broke our neckline. Now remember, this point it breaks our neckline is our entry to sell. Now this is our first top and this is our second top. This is making what? Double tops or M pattern, right? So now we have seen an example for a bullish for double tops. Let's look for example of a double bottom, right? So that you understand this thing clearly. You can also go back on your own and search for more examples to make it easier for you to understand better, right? Make it easier for you to understand better. This is an example of head and shoulder pattern. Look at this. It came down, right? It couldn't break this point. Went to this point, came, broke past that point, formed the head, right? Went back, right? Came down, then broke past our neckline. You understand? So let's look for example of a double bottom. That's what we're interested in, double bottom. For all these kind of patterns where you see that the market just goes down and forms one single double bottom, one single bottom, or one single top, or a single top like this. When I teach demand and supply, you understand those patterns better. You understand? So but for now, let's look for more examples of double bottom. This is another example of double top. Look at this. Market went up, right? Met a resistance. It came down, formed our neckline. Our neckline went back to that top again. It couldn't break that resistance. Then it finally broke this neckline. Now this point where it breaks the neckline is our entry, right? So this is another double top. And let's look for one example of double bottom. We have been checking double bottom. We will find example of double bottom. I think this is an example of double bottom. Now look at this. The market went down, right? It couldn't break this point. It went up, right? It came down. Remember, we mark here our neckline, and finally came and broke the neckline. Right? After it broke the neckline, markets it sold for a very short period of time. It didn't sell for long. Now look at this. Now this is another example of double tops. The market went up, met a resistance, it went down, came to around the same region, mark out our neckline, and it came down and broke the neckline, right, around this side, and it sold for some time, right? So just like that. So there's no big deal about this whole stuff. Let's look at this last example of double bottom. The market went down here, right? Came to around this region, went down again. Remember, you mark your neckline, came to around this region, and he broke the neckline. Remember, when he breaks the neckline, always remember it's your entry. Your stop loss SL is around here. Your TP can be here. Yeah, TP. So now he broke the neckline and continue going up. So I think that is all for I've explained head and shoulder pattern for bullish market. I've explained head and shoulder pattern. I've explained inverse head and shoulder pattern for bearish market, right? I've explained double tops for bullish market. I've explained double bottoms for bearish market. So just like that, right? Just like that. Remember, the point where you break the neckline is our entry. So that is all for this particular section. In this particular video, I only talked about reversal chart patterns, which is head and shoulder pattern, both inverse head and shoulder pattern, and I talked about double tops and double bottoms, both for bullish and bearish market. So don't forget to subscribe to the video and share with as many of your friends that want to learn how to trade for free. All the resources I'm sharing here are completely free, and I believe are really helpful to as many people want to learn. Thank you for your time.